everybody. I'm Bobbie Camacho with Signature Real Estate Group. Welcome everybody. Today we're going to be talking about a little bit about adjustable rates, and also too we're going to be talking about the market and the interest rate. And the person to talk to us about that today is Shelly Panzarella from Prosperity Lending. Hi Shelly.
Hi Bobbie, how are you?
I'm good. How are you today?
I'm great, thank you.
Good. So we're going to talk a little bit about the adjustable rates. I'm going to go ahead and hand that over to you. Can you talk to us a little bit about that?
Yeah, so I'll start off with mortgage rates just to begin with. So we are still seeing a little bit of an increase in interest rates, but one thing to remember is that our rates are actually where they were before 2020. So remember, before the pandemic began, we're actually seeing the similar rates in the fives. So we approached 5.25, just as a range as far as interest rates, and of course, dependent upon your credit score. One thing that is making a comeback is our ARMs, which are adjustable rate mortgages. And so that is typically a fixed period of time. So usually you'll see a 5-year, a 7-year, or a 10-year ARM, and then it becomes an adjustable rate mortgage. One of the great benefits to this is going to be for our the time frame that you live in the home. So if you don't intend to live in the home for longer than say 5 years or 7 years or 10 years, an adjustable rate mortgage could actually be a great benefit for you, where you still have that fixed period of time, right? And then so your rate is still fixed, but it's also about a point lower in interest rate versus our 30-year fixed. And on average, how long do you think an owner stays in their home?
About 5 to 7 years. I've been noticing that, once they start to, either something happens in their life, they're moving, they need to upgrade. Yeah, probably about 5 to 7 years.
Yeah, so imagine if you can get into either a 7-year or a 10-year ARM and the rate's going to be a little bit lower. It could actually work out to be in your benefit, where you know that you're not going to be living in that home long term for a 30-year mortgage, and you can still take advantage of a lower interest rate and it will still remain fixed. So good benefit for an adjustable rate mortgage.
Yes, and then again, the interest rates did move up a little bit, but we are still at the same rate prior to COVID, and the market was super hot then too. So buyers were buying, so it's not really affecting the market a lot right now, as we can see.
Yeah, one thing I actually had a client ask me the other day, is this the right time to buy? He was actually relocating in here to Las Vegas. He's a VA, so he's being transferred in. So he had to, make a decision to either rent or purchase a home. And of course, the differences in the mortgage rates, or sorry, the mortgage payment versus the rent amount, it was pretty much the same. And his biggest concern was the interest rate. And so one thing we talked about was appreciation. So assuming you were to come in, is it more important for you to, have the same mortgage payment or rent payment, but be able to gain some form of appreciation, which we've seen over the course of the last few years, right? This great appreciation, whether it happens at the same pace, which I'm not sure that it will, or the normal pace of like 3 to 5%. And then the opportunity for a refinance down the road, should things happen based off of, the recession and inflation and all this stuff. If we get all of that fixed, there could be an opportunity for him to refinance. So he actually made the decision that it would be more in his best interest to purchase, to take advantage of where the market is today, even though in his mind he was, bummed out that he couldn't get the rates from last year. But knowing that he could lock in his interest rate from increasing and be able to lock in the sales price as that continues to appreciate. So it was actually a great decision for him to make in moving forward with actually purchasing a home, even in today's environment.
Yes, and those are the kind of the three options that you can, just go ahead and purchase. You can pull equity. If you are sellers, you can pull the equity right now, and either sell the house, pull the equity, use that money towards another property. And yes, the properties are higher right now, but when you use that equity, it brings it back down. So you're kind of in that benefit of using your equity on that. So that's a great option to be able to do that. Now, you guys, if you have any questions, because you guys can call her and she'll be able to run all the numbers, run all the scenarios, just kind of you can see where you're at right now, or even 6 months from now. It'll give you an idea. You could take that paper home and talk about it and see where you guys want to be, as far as either selling, refinancing, or just pulling the equity for another property. So I hope that helps you guys. If you have any questions, you can call us, email us, text us, however you guys want to get a hold of us. We're here to help you in every way possible. So with that said, you guys make it a great day. Bye.
Bye.